Okay, everyone, thanks for joining us again. My name is James Gregg. I'm here with John Wires and Fred Dickinson. John and I work together with Boulder Creek Investments doing some multifamily syndication. And Fred is, wow, what is Fred? He's a friend, he's an investor, he's a business partner, and he's an insurance extraordinaire, insurance expert. So we wanted to ask you some insurance questions today. How's it going, guys?
Good, good.
Good,
Glad to be
good.
here.
Nice. So I know we're kind of on the topic of insurance. Obviously, Fred is the expert in the room for that. John, do you want to add any flavor to the story here, or should we just turn it over to Fred and see if he can start telling us all the information?
No, you pretty well covered it. I think, again, Fred is on the commercial side. He can give an introduction about himself, his company, what services he provides, and then he can go through insurance in general, and we'll just shoot back with questions.
Sounds
All right.
great. Take it away, Fred.
All right. So, yeah, my name's Fred Dickinson, co-owner of Agema Insurance Solutions. We do a lot of multifamily insurance for investors, property managers, kind of carved out a niche for that. We also do all types of business insurance and home and auto, but like to focus on the larger multifamily and commercial space. Um, so, yeah, just excited to join you guys and I guess fire away with any questions you have.
Cool.
Okay. Did you want to run through your list, or do you want us to shoot you questions? We could go either way.
Okay. Yeah, so basically, kind of what happens whenever you get under contract with a large multifamily property, uh, typically going to, be using leverage and have a lender that's on board. And so they're going to give you a sheet that has all the lender requirements on it. And this is very important to look through, kind of know what they're requiring on that, so you're able to get with your agent and send that to them so they know what their expectations are, what they need to be quoting. And just touching on, I made a list of the bigger items that need to be kind of focused on for that. A lot of them are going to be requiring a special form policy. What that typically is an all risk policy. So it covers all risk unless there's a specifically excluded item on there, which is different than a basic policy or a broad policy, which has named perils. So they name the perils that aren't covered on there, and there's a list of those that you can see. So on this, it's a special form. It's the best form of policy on there. They also require replacement cost coverage versus actual cash value. And so that's a big thing when you're shopping for insurance, is making sure that you're going to be able to get replacement cost value. And then within replacement cost, uh, depending on the age of the roof, some of the carriers out there, if the roof is 12 or 15 years old, they're only going to want to insure it for actual cash value. So just kind of have to be aware of different things like that. It may say replacement cost value on the quote, and then if you dig in a little bit deeper, they will have a subjectivity on there that is actual cash value for the roof if it's showing signs of wear. And the underwriters, uh, they use a lot of technology to see what these roofs look like, so they can zoom in with Google Earth or other software they have, and on a flat roof they can see a lot of signs of wear if it looks like it's deteriorating. So they may call you out on it if you say it's new, and they pull up a recent Google Earth image and they're like, it doesn't look too new to us. So you have to get some confirmation on that.
And Fred, question on that for you. Is that something that like a layperson, a normal person can go find? Like if I read through the insurance docs, is that going to jump out like, oh, the roof is not replacement cost, the roof is the actual cash value? Or is that something that you'd really need to rely on your insurance broker, your insurance professional to call out for you?
You can. It is on there. You just have to kind of read the fine print, because
Okay.
it may not be at the very top of the quote, but if you keep reading through it, it should be on there to let you know. But yes, also the agent needs to or the broker needs to advise you of that, so there aren't any surprises.
Gotcha.
Yeah, after that, Another big item is the insuring it for full replacement cost. Some lenders may allow you to insure it for 80% of the full replacement cost, while others require it to be insured for 100% of value. So it's just something to look at as well. You want to make sure that they are insuring it for the full replacement cost if that indeed is a lender requirement for you. And going through there, they may require personal property coverage. So that's just another coverage you want to make sure that you ask your agent to add on there if they are requiring it. In multifamily, there's not going to be a whole lot of personal property if you have washers and dryers, or maybe you have, an office in there with some office equipment. You just want to make sure that you're kind of getting an inventory of what that business personal property is, so that way you can have some coverage for that as well.
Is a standard personal property amount maybe around 10 grand?
I would say at a minimum. Yeah, at a
Okay,
minimum,
minimum.
start at 10 grand.
Okay.
That should suffice if, there's a lot of different things that you could add, different things just depending on how you have your structure set up.
And in our current acquisition here, they have an extensive collection of DVDs in the commons room there. So
Yeah,
definitely
I remember seeing that.
Yeah, definitely can't forget about those ones.
Yeah, there's a nice. I think I saw Dumb and Dumber.
Yeah, there's a lot of Disney movies there, so that's priceless.
That's right. Yeah, so kind of going down the list, another item on there is deductible. So they've got two different types of deductibles typically on these policies. You've got what's called an AOP policy, or all other perils, and then you've got a wind and hail deductible. And so the easiest way to kind of figure out between the two, of course, is you've got your wind and hail deductible, and everything else besides wind and hail is going to be your all other peril, like fire losses, water losses, things like that. So,
and Fred, are they usually the same? One is higher, one is lower. Is there a rule of thumb that someone should look for?
typically the wind and hail is a lot higher, especially in the areas that we're in, Kansas, Missouri, the property down in Oklahoma City, especially. So these hail and wind prone areas tend to have a lot higher deductibles for wind and hail. If the bank is requiring the deductible to be lowered down to 25,000, the carrier may come out with a 2% or 3% wind and hail deductible, but you can buy those down for an additional premium. So you can usually buy them down. It's going to cost a little bit more to buy it down, but it is possible to buy those down.
And it sounds like those could definitely come at a good premium. And they have cases where it could be as low as, like we've dealt with before, like 100K, because whether past history or they know it's heavy damage, they want to make sure they get paid a higher deductible versus you buying it down. So they'll charge you a lot for it or make you pay a high deductible. Is that why they have that minimum on there?
Yeah, it's to cover them, and a lot of these buildings have very large roof systems and hundreds of thousands of dollars. So yeah, it's very costly.
Gotcha.
Next on the list, they're going to require some business income coverage. So in the event that there's a large fire or large loss that makes the units uninhabitable, then of course you want to have a loss of business income insurance. Typically what I see is they're requiring 12 months of that or up to 18 months. And so to figure that out, you take the average rent for each unit, 1, 2, 3 bedroom, whatever it may be, multiply that out by 12 months or 18 months to get your loss of income coverage for that. So very important in the event of a catastrophe that you could have there.
So Fred, if I'm hearing that right, if the entire property is somehow uninhabitable, that's when the insurance would kick in, and then they would pay basically that same amount of income, whatever we were projecting for the next 12 to 18 months, whatever the coverage is.
Yes, and they pay it. They pay it for a certain amount of time, and it's usually they try to make it to where a reasonable time to repair it.
Okay.
So they do stay on top of it and check to make sure things are progressing. But yes, yeah, it's a good coverage to have, so you're not out all that cash flow that you've worked so hard to get.
Hmm.
And
So
just to reiterate too, this is for items for like fires, floods, anything that's covered on your policy. They would help you
exactly,
on the business income.
yeah, it
I
has to
mean, it
be
wouldn't be obviously negligence or anything like that,
right. Yeah, it has to be a covered cause of loss in order
right?
for that coverage to kick in. So.
Sounds good.
And then the next item, equipment breakdown coverage. That's your coverage for the major mechanicals. Typically, a lot of people refer to as boiler and machinery coverage. So that's your, if it does have a boiler system, HVA system, the major mechanicals on there. So that's a thing that I usually see on the lender requirements. Flood is another one. If the property is in a flood zone, then the lender is going to require flood insurance. And then there's two different routes you can go there, through private or through the National Flood Insurance Program. So you just need to check and see if it's in a flood area. You know, a lot of different maps and different ways you can find out about that. And the realtor usually will have a pretty good idea about that for you.
And we always definitely recommend to, as due diligence, just check out to see where it's at. Because, I mean, even though if it's a flood zone, it might not be directly in it versus on the outskirts. And then you can add different rates and elevation surveys done to, get it reduced if you have to get flood insurance.
Exactly.
It's definitely an important thing.
John's had some nasty experience with that.
Yeah, some education there.
Yep. And then next on the list, ordinance and law coverage. So that's something that we usually see on the lender requirements. There's ordinance and law is kind of broken down into three different types of coverages. So there's an A, B, and C. The A coverage is a loss of value to the undamaged portion. And then B is the demolition cost. And then C is the increased cost of construction for code, to get it up to code. And so, they want to make sure in case there is a large loss on it that, you're going to be able to get it up to what the city and the county requires, and then take care of that. They could even enforce codes even on the portion of the building that was not damaged. So once a fire loss or something happens, it triggers the rest of the building. So when the code officials get in there, you want to make sure you have coverage for all these things that they start coming up with that may not be up to code. So it's a very important coverage to have. It could definitely sink you if you don't have that coverage.
Yeah, I just learned about commercial insurance way back when. Didn't realize that was necessarily an option, and asking other property owners when they had a fire or flood damage, when the city steps in, with permits, everything like that, the amount of your renovation could double easily based on ordinance and codes, just because for like a fire situation, you might have to put in a sprinkler system, and that could be upwards of $60,000-$70,000 for one of the buildings. So that's extensive. Or like electrical panel upgrade, rewiring. I mean, that stuff's huge. So, and most likely you're going to have inspectors check out all that work when you do full rebuilds like that.
Absolutely. So yeah, I handled claims for 20 years and was deeply involved in a lot of situations like that, to where there may have been a fire in the basement. It's a 4-story building. They had to completely redo all the sprinkler systems on all 4 floors, redo all the HVAC system. It ended up costing them about $5,000 on this one particular claim just to get the building back up to code. So if they didn't have this ordinance and law coverage, I mean, they'd have to come out of pocket, or just it can hit you pretty hard. So very important there.
Is that pretty common on residential policies too, to have that?
Yeah. If you look at your homeowner's policy, if it's an HO3 policy and you look through there, it'll usually have 10% for ordinance and law coverage, and of course you can bump that up to it's not as, it can come into play on residential if it's an older home. So
Sure.
yeah, just
Is
definitely
that
something to look out
common?
for.
Is
What's
that
that?
common to have in either residential or commercial? Because that, I mean, with John's example of adding a sprinkler system, like that's a catastrophic loss financially if you don't plan for it, if you don't have coverage for it. Is that normal? Like everyone generally has that, or is that something that's kind of above and beyond?
Um, a good agent will make sure that it's on there or advise you that it needs to be put on there
Hmm.
because it's something that, can really sink you if you don't have that coverage. So I highly recommend it, especially on older buildings for sure. But, codes change, pretty frequently. So you just want to make sure you're covered.
I
Yeah.
don't I don't see the city pulling back or these upgrades getting cheaper anytime soon.
Yeah.
So,
Yeah.
I mean, it should just be. I mean, I guess there's definitely ways to not have the city involved, especially if it's your own home. But once you get to commercial stuff, it's tough to not have them involved.
Yeah.
So,
Yeah. Absolutely.
Cool.
Yeah, another thing to check once you work with the agent, get everything quoted back, you want to make sure that you're taking a look at the quote because what they have, they call it couple different things: subjectivities, conditions, or exclusions. And so at the very bottom of the quote, it'll say excludes aluminum wiring, polybutylene piping, stab lock panels. So you just want to, thoroughly look over that, and hopefully your agent's thoroughly going over that as well if you've already gone over that before you get to that point. But yeah, you just want to make sure that you check the exclusions that they have on there because anyone can bind a policy, but after it's bound, they're gonna send an inspector out and they're gonna look for these certain items, and if they do find it, then they're gonna require you to get those taken care of, or they could just flat cancel the policy. So
how long do you usually have to cure that?
they will work with you. I've seen them give out 30-day notices. But after the 30 days, as long as the person is being compliant and showing that they're working towards getting these things done, they will extend it out. So they'll try to work with you. But yeah, it's just easier to make sure what you're working with before, so you don't get into that situation.
Would this also include safety items or not really, like exit signs, fire extinguishers, things like that?
Yeah, absolutely. Yeah, a lot of them will
Okay.
require upfront that every portion of the building has fire extinguishers, smoke detectors. That's definitely a big requirement. So the safety issues are definitely a big one.
Okay.
Cool.
Um, one last question too about possible discounts. So when we were talking about the fire, the damage, the ordinance, obviously these are things that would cost a lot of money, and with that comes higher premiums. Is there possibilities to mitigate or decrease the premium by putting in something like auto outs, requiring renters insurance, no smoking policies? Have you seen that before done to work
Yeah,
with
they
the
have
builders?
each carrier is a little different. Some will offer discounts for certain things. You just need to check with that carrier and see each one is a little different. Some will offer certain discounts for exactly what you said, and some, we've gone to and say, "Hey, could we get a discount for this?" And they're like, "No, unfortunately, this carrier doesn't have any discounts for that." But yeah, you can add a lot of different things on some companies, and it's definitely worth checking into. Um, to see what the savings could be, but you also have to weigh that against the cost of installing those. I've seen quotes where like, yeah, we'll give you a 10% discount if you install these items, or it costs $40,000 to install it, and the discounts 30, so you spent 10 more, but you made
Right.
the building safer. So
Like
just
the
kind of
fire sprinkler system.
right. Yeah, those can be really costly, but over time, that is going to help lower your premiums. If you've got a fire suppression system in one, that is very attractive to insurance carriers.
Right.
Gotcha.
So,
Yeah, one of my pet peeves that we were talking about before is, we were looking at potentially adding a suppression system like that, but with the city, they would require you to do many more upgrades, essentially invalidating that upgrade. So you just got to be careful. It might seem like a small amount, but if you get into it with the city, you could potentially be looking for a lot higher cost upgrade. So people
Yeah,
should
absolutely. A good example of that is on a building. As when I was an adjuster, it's kind of nice on the adjuster side because I can see how all these things play out. But yeah, they required them to put in a fully automated fire suppression system. They installed the entire system and didn't leave enough clearance between the ductwork and the sprinkler system, and so then they had to go through and redo the entire ductwork through the whole building. So it ended up like just burning them. So, and that may have been the fault of the contractor, but still, it's just a pretty unfortunate scenario. So,
yeah, I mean, they could be like, hey, this is a quarter of an inch too close. I don't know. It just depends if you get the inspector on a good day or not.
Right. Yep, exactly.
But then again, you'd think that the contractor should know what they need to do as far as
code is.
goes. So,
yeah, exactly.
Sometimes they might not have options. I don't know.
Yeah.
And if it's a subcontractor, so they're gonna cut corners or screw.
They don't cut corners.
That never happens. But yeah, that's the next item kind of goes into the liability side of it. And so the lenders are going to require, like a $1 million, $2 million liability policy, and some of them may require a $2 million, $4 million liability policy. Now, in the current one in Oklahoma City, based on the value of the building, they also required an excess policy or an umbrella policy to go over that. So they have different tiers, and you just need to look on there and see what the tiers are. So it could be a $5 million building to a $10 million building needs, a certain amount of umbrella, and then 10 to 20 needs a different amount of an umbrella policy. So I believe on the one in Oklahoma City, they required a $5 million umbrella policy to be put over it.
I think typical is like 2 to 4, I assume.
Right.
General liability. Okay.
Yeah. And then terrorism coverage as well. Some lenders require the terrorism coverage, which could cost, premiums on those could be another $3,000 to $5,000 depending. So
how common is that?
I saw it on this last one, but I don't see it a whole lot where they require that. But
you haven't adjusted any claims yet for terrorism?
In 20 years, I never had a terrorism claim. No.
Probably a good thing.
Well, it's because you live in the Midwest, so
right.
Maybe on the coast you could definitely see it more. Definitely bigger cities.
Right.
It'd be interesting just to have that coverage on, a small western town in Kansas.
Yeah, there's nothing out there. You may want to look into some coronavirus protection.
Yeah, that I could see that for like maybe businesses just losing out on labor and everything like that.
Yeah.
I think you might have hit on too. What different types of rating systems do they have for insurers here?
So yeah, typically the lender is going to want an A-rated company, A-rated, A+, and pretty much all the companies that we deal with are going to be an A-rated company. So if you're getting into a B or C, it's just be careful that what you're getting is an A-rated, because the lenders are going to require that, and they're not going to back down from that. We've tried.
What's the downfall of getting like I don't know if there's a B or A minus, like a little bit lower, if they would allow it? What are the pitfalls there?
It's just the rating of the company and solvency, insolvency.
I gotcha.
But yeah, we don't really have to worry about that because we deal with all A-rated companies. So good solid companies.
So they might not pay out. Is there a difference on payout, or you're just saying they might not be solvent, or both?
Oh no, it's just the rating of the carrier, and I don't really get into all the other different ratings on there because I deal with
the best. Gotcha.
Yeah, deal with the best. So yeah, I don't have to worry about trying to figure out the B's and C's of the world.
Yeah, it seems like that'd be for, I don't know, riskier stuff or stuff you might not need, that premium for. So there's there's a market for all different types of coverage for sure.
Definitely.
But I'm sure you have some flippers or some investors with some, lower cost housing that would probably opt for that type of coverage since maybe they own it in cash, so. Definitely.
Yeah, they're definitely shopping just on price alone and
Saving dollars there.
want the bare bones. Yep.
Literally.
Yep.
Nice. So I think, Fred, that was kind of our whole list of points for insurance. Did we miss anything as we were kind of going through that? Or?
I don't think so. I think we pretty much hit on all of the limitations that that I've been.
It's definitely the main ones, and that's going to give people a really good coverage of what to look out for. If you can inquire about all those, you should be pretty well covered. It sounds like.
Yeah, absolutely.
Protected.
Absolutely.
Did you have any general advice for for people out there, just in general, when working with agents and whatnot, for when people looking for commercial insurance?
Yeah, I would just say, get with the agent, let them know what the lender needs, what they require. A lot of times the agent will be able to do a lot of research on his own on the building to run a valuation for the replacement coverage on it. And just as long as the communication lines are open and you're able to get the information that you need, then that will help the agent get to the quote it for you, get to the brokers, and kind of speed up the process, because it's not like going online and getting a homeowner's quote in 5 minutes. It's a pretty detailed, lengthy process, and as an independent broker, you're using a lot of different avenues to get quotes. There's a lot of different companies you go to, and so it just takes time and working with the underwriters to get the best quote possible. So it could take a couple weeks, 3 weeks. If it's a little bit more difficult of a property, it could take a month or two. But yeah, just be upfront, be transparent. If you know about prior losses and items like that, it's easier to be upfront at the beginning instead of trying to backtrack and come back around. So.
Gotcha.
Cool. Awesome.
Well, in the interest of time, I know we're kind of bumping up against what we had talked about earlier, so don't want to drag on too long, but John, you just asked my wrap-up question, asking for that general advice. I think that's really good. For someone interested in getting into this space, I think, Fred, you've done just an awesome job with giving us that outline of things to look for. So thanks for that.
Yeah, no problem. Appreciate you guys reaching out, and look forward to helping you as much as I can in the future as well.
Cool. And Fred, is it okay? I want to put the outline of the things that you covered in the video description below. Is it all right if we leave some contact information for you as well, just so people can kind of reach out, ask any follow-up questions, or possibly work with you for their insurance needs?
Sure, absolutely.
Perfect. Okay. Excellent. Well, then I guess with that, we'll wrap it up for here. So,
all right.
Fred Dickinson, Agema Insurance Solutions.
That's right.
Isn't it right? All right, Fred, for you, for John, for myself, we're going to wrap it up. So thank you, everyone, for joining us. And feel free to contact Fred to get some more insurance information. Thanks, guys.
Awesome. Thanks, guys. See you later.
Thanks.